Yes, students, now we will revise the most important and the lengthiest topic in income tax, that is computation of total income. But don't worry, we will just learn this topic in 5 parts. That is, each head of income, I will be covering it separately, guys. So before we start learning the first head of income, that is salary, first let us try to understand the computation format for the total income, guys. As per section 14, the income earned by the associate is classified under 5 heads, which are called heads of income. The first head of income is income from salary, and section 15 to 17 contains the provisions with respect to salary head. Then coming to the second head of income, which is called income from house property, section 22 to 27 contains the provisions with respect to house property. And from section 18 to 21, it has been omitted from the Income Tax Act, and accordingly, it is not a part of your syllabus, guys. And the most important head, that is PGBP, profits and gains of business or profession, and the provisions with respect to this is contained in section 28 to 44D. And the fourth head of income is capital gains, and the provisions with respect to this is covered in section 45 to 55A, guys. Then income from other sources, which is also called as residuary head, it is covered in section 56 to 59. And once we compute the income under each of this head, and if assessee is eligible for any exemption, he will claim the exemption under the respective head only, guys. Okay, the exemptions are covered in section 10, clause anything. Okay, depending upon what source of income the assessee has. Okay, and exemptions, I would be covering it under the respective head, under the respective topic itself, guys. Okay, sir. Then coming to the adjustments, if required, we need to make two adjustments for whatever income we already computed. The first one is clubbing of income, which is covered in section 60 to 65, and the set off and carry forward of losses, which is covered in section 70 to 80, guys. And each of this, we will be learning it as a separate topic, guys. Okay. Once we do all this, we derive a figure called gross total income, and from gross total income, assessee can claim deductions under chapter 6A, which is contained from section 80C to 80U. But most of them is blocked under the default regime. But if assessee is following optional scheme and satisfying the condition given under the respective section, he can claim such deductions. Even this, we will be learning it as a separate chapter. Okay. Once an assessee claim a deduction, whatever figure we derive is called total income. And it should always be rounded off to the nearest 10 rupees. And please be careful, guys. The total income has to be rounded off to the nearest 10 rupees. Students sometimes get confused and they will round off the income under each head and all. Please don't do that. Okay. And how to compute tax on this total income figure, we have already learned in the previous chapter. Now our task is to derive this figure. In order to derive this figure, first we need to derive the income under each head. Yes. So now in this video, we will focus on how do we compute income under the head salary, guys. And before we start with the head salary, guys, you should be knowing it. Under each head, whatever is the first section, no, it is a specific charging section which tell what income is taxable under that respective head. Under Income Tax Act, there are two charging sections. One is general charging section, which is section 4, which we learned in first chapter, which tells total income of a person earned in the previous year is chargeable to tax in the assessment year. Got it? Yes. Now, in each head, we have one specific charging section. That is the first section under each head will tell what income is taxable under that particular head, guys. Is that clear? Yes. I will just go to page number 1 where I have given the list of section number. We'll just mark, guys. Okay. So exemption, as I told you, I would be covering it under the respective topic or respective head. Okay. Then section 11, 12, 13A and 13B is not a part of your syllabus, guys. Then section 14 we just now saw where the income is classified under the 5 heads of income. Then 15 to 17, which we'll learn now, that is salary head, guys. 18 to 21 has been omitted. Under each head, under each chapter, I would be covering the respective sections, whatever is a part of your syllabus. But here I have just given like an heading. I have not given the breakup of each section. But under that particular topic, we will learn whatever section is a part of your syllabus, guys. Now come back. Now come back. Now let us get into the first head of income. Sir, you are getting into our head only, sir. Yes, yes, I need to get into your head, brain, mind, so that every provision will sit there. Fine, guys. So first, our first task is to, sir, understand how to derive this figure. Yes, let us see. Income from salary, computation of taxable salary. Under that, various components would be there, guys. See, actually, there are three sections covered in this head: 15, 16, and 17. 15 being a charging section will tell anything which employee will earn or receive from employer under the employer-employee relationship will be taxable under this head on due or receipt basis, whichever is earlier. Whichever is earlier. So the basic criteria for an income to be taxed under the head salary is employer-employee relationship, guys. Clear? And if an income is already taxed on due basis, again it will not be taxed on receipt basis. And at the same time, if any advance salary is received by an employee from his employer, it will be taxed on receipt basis. But again, when it is due in the future, it will not be taxable. Clear? Means it will not lead to double taxation. That is what they are telling. So anything which employee receives from employer under employer-employee relationship will be taxable either on due or receipt basis, whichever is earlier. Got it? Yes. And section 16 has three deductions, which we will see later in detail. And section 17 defines three terms, guys. 17.1 defines salary, 17.2 defines perquisites, and 17.3 defines profit in lieu of salary or profit in addition to salary. Yes, sir. Fine. So now we will see the computation part. Now, employee might be getting different benefits, whether is in monetary form or non-monetary form from his employer. Will everything form part of his salary income? Yes, guys. I've just given few things here. Basic pay or basic salary, dearness allowance, which is given by the employer to meet the cost of inflation or increased cost of living, which is given by employer to employee. Okay. Yes. Bonus, commission, city compensatory allowance, medical allowance. Guys, all these are fully taxable always. And there can be any other allowances. First of all, sir, what is allowance? Guys, allowance is like a fixed amount which is given by employer to employee every month or every year in order to meet his expenditure. That expenditure might be related to office or it might be related to personal also. Personal means the personal expenditure of employee or any of his family members. In such case, sir, if any exemption is available, what should we do? First, we need to check how much is the amount received minus exemption. Remaining, if anything is taxable, we have to bring it here. We have to bring it here. Clear? And with respect to few allowances, exemption is given in the law, so we need to learn that. And if there is any allowance for which exemption is not available, that means it is fully taxable, straight away bring it here. Full amount has to be brought here. Same way, we need to check, is there any benefit which is given by the employer to the employee in kind, or if there is any reimbursement of expenses, which is actually called as perquisites. It might not be given directly in the form of money, but in kind. For example, employer has given house for employee to stay along with his family member or car to use. So all this comes under perquisites. Or employee or employee's children expenses has been met by employer. So this comes under perquisite. And when it is coming to perquisites, in the law itself, they have given what is the value of perquisite, which is taxable under the head salary. We need to calculate that and then bring it here. When we add up all this, we get a figure called gross salary. And under gross salary, we can claim deduction under section 16 from gross salary. Got it? And these are the deduction which is available only for an employee who has salary income. Now assume I am an assessee who doesn't have any income under that salary. Can I claim these deductions? No, sorry. This is only for an assessee who has the income under the head salary. Got it? Yes. And we'll learn about each of this later, guys. So once we claim these deductions, we get income from salary or taxable salary. And this is the figure which we need to include in total income calculation, guys. Total income calculation. So each of this, how do we compute and what is the value we need to take? We have to check. Okay. Section 15, I already covered it. Then there is a difference between foregoing of salary and surrender of salary. Sir, what is it? Foregoing of salary will not protect me from paying taxes, guys. I have to pay tax on it. For example, assume I am working in Infosys company. I am asking my employer to use that money for any charitable purpose or for Infosys Foundation purpose. Will it exempt from tax for me? No, no, I need to pay it. Maybe I can claim deduction under section 80G, but straight away will salary income be exempt for me? No. But if it is a surrender of salary as per central government, okay, and if I'm surrendering my salary to central government as per their scheme, then I need not pay tax on it. I need not pay tax on it, guys. Okay, and that surrender should be in the public interest. Okay, then we will get into the allowances, guys. What is allowance? Come on. A fixed amount which is given by employer to employee either monthly, quarterly, or yearly, which can be used by the employee for his personal purpose or office related. In that case, for income tax purpose, we need to divide the allowances into three categories: fully taxable allowances, fully exempt allowances, and partly taxable or partly exempt allowances. So what I would suggest is remember this two list. Rest all is taxable. Rest all is taxable, guys. Okay, let us see it. Let us see it. First, I will start with fully exempt, then partly exempt, then I will go to fully taxable. Is that clear? Yes. Fully exempt allowances. Any allowances provided to High Court or Supreme Court judges, any is exempt. Same way, any allowances paid by UNO, that is United Nations Organization, to its employees is fully exempt. Okay. And please be careful, they are using the word any. Any means anything, any allowance. Okay, last one. Any allowances provided to the central government employees being citizen outside India as per section 10(7). Guys, if central government is paying salary for any citizen who is providing services outside India but for Indian government, it is income deemed to accrue or arise in India as per section 9. Yes. When I was covering section 9 itself, I told you any allowances and perquisites paid for them is fully exempt, including perquisites, which we'll learn later. Yes. Then what is taxable for them, sir? Basic pay, bonus, commission, such things will be taxable. Clear? Because it is income deemed to accrue or arise in India, guys. Okay, sir. Fine. So these three allowances are fully exempt. Okay. And here, what is the allowance? They are not mentioned. But please be careful. Who is the receiver you see? For them, any allowances they are receiving is fully exempt, guys. Okay, sir. Then, second, next one is partly taxable or partly exempt allowances. First one under this HRA, which is important. HRA means house rent allowance. Here the employer is giving an allowance to an employee to meet his rental expenditure. Only if employee is paying the rent and staying in a rented house, he can claim this exemption. Sir, what if employee is staying in his own house or along with his parents or family members where he is not paying any rent? Then he cannot claim this exemption. So exemption is available only if employee is staying in a rented house and paying rent, guys. Okay. How much is the exemption available, sir? Under section 1013A, least of the following is exempt. That is actual HRA received. Second one, rent paid by employee minus 10% of salary. Okay. And what is salary for this purpose and all? I will cover it at the end of this head. You need not worry. Okay. Yes. Just try to remember this provision. Understand it. Okay. Amount equal to either of the two will come, not both. Under C point, we have two things. First, if accommodation is provided in CDMK, CDMK stands for Chennai, Delhi, Mumbai, Kolkata, then we need to take 50% of salary. Easy to remember, guys. CDMK, especially the people from Tamil Nadu or the people who have political knowledge. In Tamil Nadu, like now elections are coming. We already have DMK, AIDMK party. Now we all let us form a new party called CDMK, that is Chinnamma's DMK. We will make her to stand in the election and we will give our best to make her win. Got it? So Chinnamma's DMK. So the full form is Chennai, Delhi, Mumbai, Kolkata. So if accommodation is provided by the employer in the following cities, then we need to take 50% of salary. In any other city, then it is 40%. And please be careful, guys. It is only the particular city in the state. Don't take the entire state. For example, only if accommodation is provided in Chennai, it is 50%. Sir, what if it is in Madurai, Coimbatore, or any other place of Tamil Nadu? Then it would be 40%. Okay, please be careful. They didn't mention Tamil Nadu here. They've just mentioned Chennai, Delhi, Mumbai, Kolkata. Clear? Even in Maharashtra, we might have different places. Even in West Bengal, we might have different places. If accommodation is provided there, we need to take 40% of salary, guys. Please be careful. And both of them will not simultaneously come, either 50 or 40%. Is that clear? Yes. And sir, here 10% or 50% or 40% of salary, we need to consider what and all for salary purpose. As I told, please just hold on. I will cover this at the end of this head. I have just given one single note for this. Okay, sir. And please be careful, guys. Exemption is available only when rent is paid. Now assume employee is receiving HRA for full 12 months. He is also getting salary for full 12 months, but is paying rent only for 8 months. That means the following calculation is only for 8 months. Whereas for the remaining 4 months, whatever HRA is receiving but not paying rent, HRA will be fully taxable. Fully taxable. And when we are claiming the exemption for 8 months, which we call it as relevant period means the period for which rent is paid by the employee. Yes. And when we are claiming the exemption for 8 months, please be careful. Even salary, we need to take it only for 8 months. Even though the employee might be receiving salary for full 12 months. But while claiming exemption for HRA, we need to take salary only for the period for which rent is paid by the employee, which we call it as relevant period, guys. Okay, sir. Next, 10.14.1. Special allowances for performance of official duty. This is the allowance which is given by employer to employee to meet official expenses, that is office related expenses. Sir, how much is exempt? Actual amount received or the actual amount spent, whichever is lower, guys. For example, assume for conveyance purpose, employer had given 10,000 to employee and employee has spent only 8,000. How much is exempt? 10,000 or 8,000, whichever is lower, 8,000. What if employee has spent 15,000? Then 10,000 or 15,000, whichever is lower, 10,000 would be exempt, guys. Clear? And in the first example, 2,000 would be taxable. It would be included in salary calculation, guys. Okay. Some of the example here is like traveling, conveyance, daily allowance, helper allowance, research allowance, and uniform allowance, guys. Okay. Then there is 10.14.2, allowance to meet personal expenses of employee or his family members. In this case, how much is exempt is given in the law. So actual amount received or the specified amount, whichever is lower is exempt. Actual amount received or the amount specified here, whichever is lower is exempt. Okay, fine. What are those? Tribal area allowance, that is some specified area of, not the entire state, some specified area of Madhya Pradesh, Tamil Nadu, Uttar Pradesh, Karnataka, Tripura, Assam, West Bengal, Bihar, and Orissa or Odisha. 200 rupees per month is exempt, guys. Okay. Then children education allowance. If employer is giving a allowance to meet the educational expenses of employee, then a exemption is available for 100 rupees per month per child, but maximum 2 children. Huge exemption they are giving. You can see this is not even enough for the parent to meet the chocolate or the pocket expenses of children's. Okay. Hostel expenditure allowance. If employer is giving any allowance to meet the hostel expenditure of employees' children, then the exemption is available for 300 rupees per month per child for maximum 2 children. Okay. Then transport allowance is exempt to the extent of 3,200 per month, but it is available only for physically challenged, deaf, dumb, and blind employee. Now, please don't ask me, sir, are you enjoying this exemption? No, I am not blind. I am just wearing specs. Okay, I can see you. I can see the book. I can read the provisions. Got it? Yes, sir. Fine. Then, allowance for transport of employees. Guys, this is different. This is different. Allowance for transport of employees means this is an exemption given for an employee who is working with the employer who is engaged in transportation business. Okay, that is the employer is engaged in the business of transportation of passenger or goods. In such case, the employee who is working as a driver or conductor, they can claim the following expenses. How much is that? 70% of such allowance or 10,000 per month, whichever is lower. Whichever is lower, guys. And this person should not claim exemption here in such case. Is that clear? So they should not be receiving any daily allowance and all. Okay. And please be careful. This is only for the employees who is working with the employer who is engaged in the transportation business, guys. Is that clear? Yes, sir. So we saw the list of fully exempt allowances and partly exempt allowances. Now, remaining all is fully taxable, guys. You need not remember this list. You just try to remember this two list. Rest all is fully taxable. I have also given the list here. You can just go through it. The following allowances are fully taxable, guys. Okay, so now let us move forward. Yes, here I have given who is specified employee because for few perquisites it is taxable only in the hands of specified employee. So before we start with the perquisite valuation or perquisite provisions, we should know who is specified employee. So for income tax purpose, three people are covered here, guys. If an employee is covered under any of this point, he is called as specified employee for income tax purpose. So who are those? An employee of a company who is also a director. Okay. Then an employee employee means who is a director means the managing director or whole-time director of a company, guys. Clear. And one more thing. See, some of the directors might not be in employment. Clear. That is like part-time director. In that case, whatever they are earning will be taxable under the head either PGBP, or if they are earning any sitting fee or the director's fee for attending the board of directors meeting, then it will be taxable under the head other sources. Got it? Yes, sir. Only if they are under the employment, whatever salary they are earning, that will be taxable under the head salary. Guys, please be careful in few scenarios. Okay, I'm just going out of this and I'm explaining part of syllabus. Yeah. In few cases, the person might be receiving salary, but there is no employer-employee relationship. For example, salary received by a partner from partnership firm, or salary received by a MP or MLA from the government, or even salary received by any person who is not under employer-employee relationship. In such case, will it be taxable under their salary? No, guys. Whatever salary the partner is receiving from partnership firm, it will be taxable under the PGBP. And whatever salary the MP, MLAs are receiving, they are not the employees of government. They're just representing the constituency from where they are elected. So whatever salary they are receiving will be taxable under the head other sources. Clear? Yes. Even when it comes to the director, you can see here, if a director is a managing director or whole-time director, then he will be an employee of a company. Whatever salary he is earning from the company will be taxable under that salary. Yes, sir. And on that, the employer or the company would be deducting TDS as per section 192. Whereas, assume a director is not an employee of a company and he is earning the director fee or sitting fee, then where it will be taxable for him? Income from other sources. And on that, TDS would be deducted by the company under section 194J. And now important. Sir, what if I am a managing director and receiving both? Possibility is there. Receiving both, I am a managing director of a company. I am getting salary in my employee capacity. That will be taxable under that salary. And he is also getting director fee or sitting fee in director's capacity. In such case, even though he is an employee, this amount will be taxable under the head income from other sources. And the company would deduct TDS under section 194J. And this provision is also important for GST purpose, guys. This is a part of Schedule 3. No GST is applicable on this, whereas this is taxable under reverse charge mechanism. I will explain this when I'm covering GST, guys. I repeat, this is a part of Schedule 3 in GST, not taxable, whereas this is taxable but under RCM. The company need to pay the company need to pay GST on whatever director fee or sitting fee it is paying to the director, guys. Clear? Whereas under income tax, it is taxable in the hands of director under the head other sources. Got it? Yes, sir. Fine. Next, second point. An employee who has substantial interest, that is 20% or more voting power, that is 20% or more equity shares they are holding, they are called as specified employee. And the last one, employee whose income under the head salary exceeds the prescribed limit of 4 lakh. Clear? There's an amendment. Please be careful. Previously, it was a different amount. So if the income under the head salary of an employee is more than 4 lakh, then they are called as specified employee. And how do we calculate this 4 lakh is compute taxable salary of an employee minus non-monetary benefit. So this 4 lakh should not include non-monetary benefit. Guys, no doubt this will be taxable. Obviously, for an employee, what is taxable is taxable salary. Correct. But while calculating this 4 lakh limit, we need to exclude non-monetary benefits, guys. Is that clear? Yes, this is an amendment part. Please be careful with it. Yes, sir. So now let us move to the perquisites. We are completely done with allowances, and before perquisites, we have learned who is specified employee, because few of the perquisites is taxable only in the hands of specified employees, guys. Okay. Now, sir, what is perquisites? As I already mentioned it, I will explain it again, guys. Perquisite is the benefit given by the employer to an employee or any family members of employee. Or it can also be like expenses incurred by employee which is reimbursed by employer. Or else employee's expenses is paid by employer. All this is a part of perquisite, which is taxable in the hands of employee under the head salary. And with respect to perquisites, we need to check what is taxable. So what is taxable? How do we calculate it? I've just given here the format. For any perquisite, we need to see it, guys. Whenever any benefit is given by employer to employee, we need to check what is the value of that benefit or perquisite. And once we derive it, check whether employer is recovering any money from employee. If yes, reduce it. And the remaining will be taxable as perquisite under the head salary. For example, assume employer is giving benefit to the employee whose value is 10,000. But employee is paying 3,000 for it. That means what is the net benefit is enjoying people? 7,000. So how much would be taxable as perquisite in the hands of employee? Only 7,000. Clear? So this is a common dialogue while valuing any perquisite, guys. If any amount is recovered from employee or if employee has paid any amount, please reduce it and check what is the net benefit. Only the net benefit will be taxable in the hands of employee as perquisite. Hope you got it. Yes, sir. Now let us start with perquisite. There are different types of perquisite. Each one of them we will discuss in detail, guys, one by one. Okay, first one, valuation of taxable perquisite in respect of unfurnished accommodation. Unfurnished means, sir, accommodation is provided without any furniture. Only if the building portion is provided. In that case, sir, what if furnished? That we will see later. Okay, under this only it is there. We will see that. But before that, we will learn unfurnished part. So check whether the employee is a government employee or non-government employee. If an employee is a central or state government employee, then license B will be taxable in the hands of employee as determined by central government or state government. And you need not worry about this, sir, how much it will be. It will be mentioned in the question, if at all, if there is any question on this. Okay. Then, sir, what if employee is a non-government employee? Check whether the accommodation is owned by the employer or is it hired by them. Hired by them means employer has taken the building on rent and he has given it to the employee to stay there. So there are two different possibilities. First, we will see this part. If the accommodation is hired or leased by the employer, and guys, please be careful. We are checking the rent-free accommodation or the value of rent-free accommodation for whom? Non-government employee. And when the accommodation is hired or leased by the employer, what is the value of perquisite? Amount of lease rent or actual rent paid by the employer or 10% of salary, whichever is lower. Whichever is lower. And what is salary for this purpose? I will cover it later. Don't worry. Okay, sir. This is when accommodation is hired or leased by the employer. Irrespective of the population of the city, we need to take this. Whereas, what if accommodation is owned by the employer? And in the question, sir, how will we know whether it is hired or owned? Guys, if it is hired or rented out, they should have given this amount in the question. If this is not given in the question, it is understood that the property is owned by the employer. Got it? Yes. So if accommodation is owned by the employer, we need to check what is the population of the city in which the accommodation is provided as per 2011 census tax. If the population is up to 15 lakh, then we need to take 5% of salary as perquisite. If the population is more than 15 lakh but up to 40 lakh, we need to take 7.5% of salary. And if the population is more than 40 lakh, we need to take 10% of salary. Guys, any one will come, not all three. So we need to check what is the population of the city in which the accommodation is provided. And if by chance in the question they have just given the city name but not the population, guys, most of the important cities are tier 1 cities like Chennai, Mumbai, Kolkata, Hyderabad and all, Delhi, all these cities will have definitely population more than 40 lakh. So straight away you can consider 10% of salary. Because sometimes in the question they don't give the population of the city but they will just give the name of the city. So in that case, if it is an important cities or main cities, you can consider 10% of salary. Got it? Yes, sir. Then where the accommodation is provided by the central government or state government to an employee who is serving on deputation with any body or undertaking, under the control of such government is to be calculated in accordance of the above table as if the accommodation is owned by the employer. So simple. Guys, assume I am an employee of any body or undertaking which is under the control of state government or central government. But for me, accommodation is not provided by my employer. Accommodation is provided by whom? Central government or state government. So to calculate the value of unfurnished accommodation, should I follow this or this? Here clearly they are telling as accommodation is provided by central government or state government for an employee of body or undertaking, they are telling please apply this provision. Please apply this provision and not this. Got it? And in any of the above case, if rent is paid by the employee, whether full amount or short amount or concessional amount, whatever is the rent paid, please reduce it. Clear? Which is a common dialogue, guys. Again and again, I need not explain it or I need not tell it. This is a common dialogue for any purpose. Okay. Sir, what if the accommodation is furnished? If the accommodation is furnished, first calculate the value as if it is an unfurnished, and for the above value, we need to add. We need to add. If the furniture is owned by employer, take 10% of cost of furniture, and 10% is per annum. Okay. Yes. Then if the furniture is hired by employer, then take whatever is the actual hire charges or rent paid by employer for furniture. Clear? Yes, sir. Then, sir, what if accommodation is provided in hotel? Then straight away do this calculation. Don't consider any of this. This is only when accommodation is not provided in hotel. Okay. So if accommodation is provided in hotel, we need to take 24% of salary straight away, furnished value. Okay. Or actual room rent paid or actual hire charges paid, whichever is lower, straight away. Is that clear? Yes, sir. So you can just see here, I have made one chart. Rent-free accommodation for a non-government employee. For government employee, it is very easy. The license fee. Okay. Which is not in hotel. First check whether the property is owned by employer or hired by employer. If it is hired by employer, then take 10% of salary or actual hire charges. That is actual rent, whichever is lower. Sir, what if it is owned by employer? Then depending upon the population of the city, we need to take 5%, 7.5% or 10% of salary. Okay. This will be called as value of unfurnished accommodation. Okay, sir. For this, if it is only unfurnished, stop it here only. But if it is furnished, for whatever value we have got here, we need to add. If the furniture is owned by the employer, take 10% of cost of furniture. If it is hired, take actual hire charges. So at the end, we will get value of furnished accommodation, guys. And if anything is recovered from employee, reduce it. Remaining would be taxable. Got it? So in the revision book, I have given it in the table form, and here I have given it in the chart form. If you want, you can quickly make a note of this, guys. You can pause the video. If you want to take down anything or if you want to go through anything in detail, please pause the video and go through. Yes, we'll continue. We have some more points with respect to the accommodation. Perquisites which are not taxable. Okay. Anything which is not taxable or exempt, I would have given or highlighted in green color, guys. Yes. Accommodation provided in the remote area is 100% exempt. Now, what is remote area? Sir, whichever area I am staying is remote area? No, no, no. Remote area means the area located 40 kilometers away from the town and having population less than 20,000. Having population less than 20,000. Okay, sir. And if there is any transfer of employee from one place to another place, if there is hotel accommodation provided to that employee in a new place, up to 15 days, it is exempt. Sir, what if it is more than 15 days? Then it will be taxable as per this provision. For example, assume the accommodation is provided for 20 days. Then for 5 days, it will be taxable. For 5 days, it would be taxable, guys. Okay. Next, C. Okay, this is with respect to, now assume, let me try to explain with an example instead of reading the provisions. Now, assume I am an employee who is working in Bangalore. My employer has provided me the accommodation in Bangalore. Now I have been transferred to Chennai. and my employer is providing me the accommodation even in Chennai. And in Bangalore also, he will continue to provide me where my family members are staying. Okay. So once I have transferred from Bangalore to Chennai, whatever accommodation is provided in Bangalore also will be continued to be provided to me. That is, my family members would be staying there. Whereas a new accommodation is provided for me in a Chennai. In that case, only one accommodation will be taxable for me for the first 90 days. First 90 days. So I will calculate the value of perquisite for both the houses, that is Bangalore house and Chennai house. Whichever is lower, I will offer that for tax. Okay. And after 90 days, if my employer continues to provide the accommodation in both the cities, then both of them will be taxable. From 91st day, both of them will be taxable. Clear? So for the first 90 days, only one house will be taxable. Whereas after 90 days, still if employer is continuing to provide both the houses as accommodation to employee or his family members, then both would be taxable from 91st day, guys. Is that clear? Yes. The last one, the important one. The value of perquisite shall be restricted to cost inflation index when the same accommodation is provided. So this point is relevant when the employer is providing the same accommodation to the same employee for more than 1 year. In the current year, he has provided, but the same accommodation was also provided last year or last to last year. In that case, whatever value of perquisite we will calculate here, no, it has to be restricted to indexed calculation. Indexed calculation means what, by applying cost inflation index, which is a topic connected to capital gains, guys. I will try to explain this with an illustrations. Okay, come to page number 79 of my question bank. There I have given 3 illustrations on this, guys. One by one we will see. Yeah, first one. Accommodation is provided in Chennai, population more than 40 lakh. By employer to employee, which is owned by employer. Okay, so we need to take 10%. Salary for this purpose is 25 lakh. They were given directly. I have only given directly. Okay. Value of perquisite for previous year 23-25. That is last to last year. Provided same accommodation by employer for the first time. Okay. Same accommodation was provided by the employer for the first time in the year 23-24, and the perquisite value of that was 2 lakh. Okay. In the current year, what is the value of perquisite? 25 lakh into 10%, because the accommodation is provided in Chennai where the population is more than 40 lakh. So 10% of 25 lakh will come to 2 lakh 50. Okay. And guys, here I have given this 25 lakh directly. Questions may not give this figure directly. You need to compute it. Clear? But here, just to make you to understand this concept, I have straight away taken the value. Okay, sir. And this 2 lakh is the value of perquisite provided in the year 23-24. Check what is the cost inflation index for the year 23-24. It is 348. It will be given in the question. You need not worry. And what is the cost inflation index for our previous year? That is 25-26. It is 376. 376. So apply indexation. 2 lakh is the value for 23-24. Okay. So 2 lakh divided by 348. 348 is the cost inflation index for which year? 23-24. Okay. Into 376, which is the cost inflation index for our current previous year. This value will come to 2,16,092. So will both be taxable? No, whichever is low. Whichever is lower, guys. So it comes to 2,16,092. So the value which we have calculated, which is restricted to the CII calculation, guys. Clear? So whichever is lower would be taxable. So what is the value of taxable perquisite for previous year 25-26 with respect to rent-free accommodation is 2,16,092. Then one more illustration. Here I have just changed the year. Assume the same accommodation was provided to the employee for the first time in the year 24-25, and the value of that was 2 lakh. Okay. So what is the cost inflation index for the year 24-25? It is 363. 363. So how do I calculate the indexed value? 2 lakh into 376, which is the cost inflation index for the current year, divided by 363. We will get 2,07,163. Guys, the only difference is the change in year. Okay. So 24-25 is like last year. Okay. Yes. So in 24-25, the same accommodation was provided for the first time by the employer to employee. Oh. So how much is taxable is whichever is lower, 2,07,163. Next, last one. Sir, what if the accommodation is furnished? Accommodation is provided in Bangalore. Again, the population is more than 40 lakh. By employer to employee, which is owned by employer. Salary for this purpose is 30 lakh. Cost of furniture provided by employer is 2 lakh. 10% of that we need to take. Value of perquisite for previous year 24-25, that is last year. Provided the same accommodation by employer for the first time is 2 lakh 85. Okay. First, let us do the valuation for current year. Value of unfurnished accommodation is 30 lakh into 10%, 3 lakh. Then value of furniture, as it is owned by the employer, we need to take 10% of cost of furniture. And guys, please be careful. Value of furniture for perquisite valuation, if the furniture is owned by employer, it is always 10% of cost, irrespective of where the accommodation is provided, in which city, what is the population. This will not change. Only for the accommodation, the percentage will change. That is 5 or 7.5% or 10%. Whereas for furniture, it is always 10%. Got it? Yes, sir. So as per the calculation, we will get the value of perquisite for rent-free furnished accommodation, 3,20,000. Keep it aside. And as this information is given in the question, we need to apply indexation for it. 2,85,000 is the value for the year 24-25. Apply indexation and calculate what is the value for 25-26. Okay. So 2,85,000 is the value for 24-26. Sorry, 24-25. Whose cost inflation index is 363, we use it as a denominator into 376, which is a cost inflation index for current year. We will get 2,95,207. So what is the value of taxable perquisite is? Whichever is lower. Got it? So 2,95,207. Sir, always this figure only will come lower? No, need not be. Clear? For example, assume this is 220. Then only this is taxable. Got it, people? Yes. And please be careful. This provision we will apply, that is cost inflation index, we will apply only when the same accommodation is provided by the employer for more than 1 year. And only if such information, if this value and all is given in the question, only then you will apply this part. If not, just stop it for this. Got it? Yes, sir. Fine. We'll move forward for the next perquisite. Valuation of perquisite in respect of interest-free or concessional loan. Now, if employer is giving a loan of more than 20,000 to an employee and charging the concessional rate of interest, or else is not charging any interest, then such value will be taxable in the hands of employee as perquisite, guys. And here we need to take SBI interest rate as on the 1st April of the previous year as the reference rate or base rate. Clear? For example, assume employer gave 1 lakh loan to employee and is not charging any interest for it. In that case, assume the SBI interest rate is 10%. SBI interest rate is 10%. So 1 lakh into 10%, 10,000 will be taxable as perquisite in the hands of the employee. So loan is given interest free to the employee. Got it? Yes. Sir, what if the employer is charging 6% interest? That is concessional interest is charging. Then what is the net benefit? You check. 10% is the SBI interest rate as on 1st April of the previous year minus 6% actual interest charged by employer. So remaining is how much? Concessional rate 4%. So the benefit enjoyed by employee because of employer-employee relationship is how much? 4%. So 4% of 1 lakh, which is 4,000, will be taxable as perquisite in the hands of employee, guys. But if loan is given by employer to employee for medical treatment of any prescribed diseases, then irrespective of SBI interest rate, nothing will be taxable as perquisite in the hands of employee, guys. Is that clear? Then you might also ask me, sir, what if the amount of loan is less than 20,000, like 5,000, 10,000? Nothing is taxable. Nothing is taxable, guys. Next. Value of perquisite in respect of use of any movable asset by employee, that is, or any member of his household. That is, if employer is giving any asset for employee or his family members to use, then what is the value of perquisite? And this is for any asset other than motor car, because for motor car we have a separate provision which we will see later. Okay. If it is a laptop or computer, it is always nil, guys. Nothing is taxable because it is required for any kind of work as on today. Okay, sir. Then, if it is other assets, check whether it is owned by the employer or hired by the employer. If it is owned, take 10% of the actual cost of the asset to the employer. If it is higher, then whatever higher charges the employer is paying for that asset, take it. If any amount is recovered from employee, reduce it, balance is taxable. Balance is taxable, guys. Okay. Sir, what if an asset is sold by employer to employee? The ownership, risk and reward is transferred from employer to employee. And obviously, if employer has to sell it, first he should own it. He cannot take it on rent and sell it, guys. Okay. So in that case, first calculate the cost of the asset. First calculate the cost of the asset to the employer. Then from that reduce the depreciation for each completed year of usage by the employer before selling it. For each completed year of usage by the employer, if it is an electronic equipment, reduce 50% depreciation per annum under WDV method. If it is a motor car, reduce depreciation at 20% as per WDV method. And if it is other assets like cycle, two-wheeler and all, then reduce depreciation at 10% as per SLM method. So please be careful, the rate and method is different here. And this doesn't have any connection to section 32, which talks about depreciation under the 8 PGBP, guys. So section 32 is from employer point of view. That is the assessee who is having business income or professional income. While computing his business income, how much depreciation can be claimed? We will check section 32 read with rules. There the rate given is different for each block of asset. And that doesn't have any connection for this. And whatever we are learning now is to calculate the perquisite, which is taxable in the hands of employee under the head salary. Because after studying section 32, you should not get confused with this. This doesn't have any connection to depreciation under section 32 read with rules, guys. Okay. Then sale value, that is amount recovered from employee, has to be deducted. Remaining is a taxable perquisite, guys. Clear? Yes. And electronic equipment refers to what and all? Computer chips, hard disk, printer, etc. And if asset is more than 10 years old, then we need not do any of this calculation. It is not taxable in the hands of employee people. Clear? And this concept is very simple. I will just try to explain it with the format here. Yeah. Whenever the asset is sold by employer to employee, just first calculate what is the cost, that is purchase cost to the employer. From that, reduce depreciation for the period of usage by the employer from the date of purchase till the date of sale. But it is only for the completed year of usage. If it is a part of the year, please ignore it. Okay. And as per which method, sir? We have seen there WDV method or SLM method and apply the respective rates. Okay. Then we will get, once we reduce depreciation from the cost, we will get what is the WDV of the asset on the date of sale. From that, you reduce sale value. If the remaining figure is positive, then it is taxable perquisite in the hands of the employee. Actually, this is a loss from employer point of view, whereas this is a benefit from employee point of view. This figure, if it is positive, it will be taxable in the hands of employee as perquisite. Sir, what if by chance if this is negative? If by chance if this is negative, then nothing is taxable as perquisite because employee is not getting any benefit, guys. Got it? Yes. I just given few example here. Okay. I will just quickly explain. Motor car purchased for 10 lakh by employer and used it for 2 years and 4 months and then sold it to employee for how much? 2 lakh. Okay. So we need to take cost to the employer 10 lakh. What is it? Motor car. Okay. 10 lakh is the cost to the employer. Depreciation for the first year. What is the rate? 20% under WDV method. So on 10 lakh, 20% comes to 2 lakh. So WDV at the end of first year is 8 lakh. Then again calculate depreciation on 8 lakh at 20% because WDV method. No, that's why. Okay. 1 lakh 60. So WDV at the end of second year is 6 lakh 40. Sir, should we calculate depreciation for 4 months? No, I told you for each completed year of usage only. If any part of the month is there, please ignore. Even if it is 11 months, ignore it. Okay. So sale value is how much? 2 lakh, which is nothing but amount recovered from employee. Remaining is what, guys? 4 lakh 40. It is a benefit to an employee, whereas loss for employer. So why is employer selling this asset for loss to employee? Because of employer-employee relationship, guys. Hence, this 4,40,000 would be taxable in the hands of employee as per perquisite. Or one more example. So previous example was under WDV method. This I have taken it under SLM method. Bike purchased for 2 lakhs by employer and used for 2 years 9 months and sold to employee for 1 lakh rupees. So take the cost to the employer Then reduce depreciation for completed year of usage, that is 2 years. And the straight line method at 10%. So 2 lakh into 10% into 2 years. As it is straight line method, depreciation will be on actual cost, guys. Okay. Yes, for 2 years. Sir, what about 9 months? Ignore the part of the month. Sorry, ignore part of the year. Okay. So we will get 40,000. So WDV of the asset at the time of sale is 160. From that, reduce sale value 1 lakh. Remaining is positive figure 60,000 is taxable as perquisite in the hands of employee, guys. Is that clear? Yes. I will just show you. You can just observe it. This is with respect to motor car for which depreciation is charged at 20% under WDV method. And the next one is bike for which depreciation is charged under SLM method at 10%, guys. Got it? Yes. Let us go back. Next. Perquisite value in respect of sweeper, gardener, watchman, or personal attendant, guys. So, if any of these people is employed by employer for whom salary is paid by employer, in that case, whatever is the actual cost to the employee, which is nothing but the salary paid by the employer for any of this person who is working for employee, will be taxable as perquisite in the hands of only specified employee. What if I am not a specified employee? Then it is not taxable. Clear? Yes. Then who is specified employee? We already covered. Yes. Then employed by employee means any of this person has been employed by employee and they would be working for whom? Employee. But salary for them is paid by employer. In that case, whatever salary is paid by employer for any of this person, we call them as domestic servant who is working for employee, will be fully taxable as perquisite in the hands of any employee. Any employee means whether it's specified or non-specified, doesn't matter, guys. Doesn't matter. Okay, so next one. Perquisite value in respect of gas, electric energy or electricity or water supply for household consumption. First check whether it is purchased by the employer or provided from own source. If it is purchased by employer, whatever is the cost to the employer, that will be taxable as perquisite. If it means, for example, assume my electricity bill is paid by my employer. Whatever electricity bill of my house is paid by employer will be taxable as perquisite for me. Next one. Amenities from own source provided by employer. For example, assume I am working as an employee of BWSSP, which supply water in Bangalore area. Yes, and my employer is providing free water connection for me, water supply to me. He is not charging any amount for it. But whatever is the cost of generating that water, which is supplied to me, which is enjoyed by me freely, the cost of generating that or supplying that will be taxable as perquisite in my hands, guys. And in both the cases, if any amount is recovered from employee, we have to reduce it. Balance will be taxable. And if question is silent about this, no, guys, you just ignore. You just ignore it, and entire amount will be taxable in that case. Is that clear? Yes, sir. Next. Value of perquisite in respect of free education or concessional education. Guys, if it is an education allowance, we already saw under section 1014(2) that only 100 rupees per month per child for maximum 2 children it will be exempt. But what we are talking about here is education facility. That is, the school fees of the employee's children is paid by employer. Or children are studying in a school which is owned or maintained by the employer, free of cost, or at a concessional fees. Got it? Yes. So the training expenses which is provided to an employee is not a perquisite because it is very much required for an employee to upgrade his skill or the work. Yes, sir. The way he work. So fixed education allowance we already see under section 1042. It comes under allowance. Okay. Then what is taxable as perquisite in the hands of employees? Whatever school fee of the employee's children is paid by employer is taxable as perquisite in the hands of employee. Is taxable in the hands of employee. But if it is a tuition fee, whoever is paying it, whether employer or employee for the children, it is allowed as deduction under section 80C provided the parent is following optional scheme. Oh, but the last point. If education is provided in a school or college which is owned or managed by the employer, then check What is the cost of education in the similar institution in the same locality or near locality? If the cost of education in the similar institution in the same locality is up to 1000 rupees per month, please be careful. Then it is not tax. Then it is not taxable. Sir, what if the cost of education in the similar institution in the same locality is more than 1000 rupees per month per child? Then the entire value will be taxable, guys. Entire value. Assume it is 1200 rupees per month per child. Entire 1200 would be taxable. Got it? Yes. And if any amount is recovered from employee, we need to reduce it. And if a scholarship is provided by employer to employ his children to meet the cost of education, it is always exempt in the hands of receiver as per section 10 clause 16. Even if it is given by others, not by employer, assume some outsider, unknown person is giving scholarship for me to meet the cost of education of myself or my children's. Is it exempt? Yes. Scholarship received to meet the cost of education will always be exempt in the hands of receiver, guys. Next, value of perquisite in respect of free meals or concessional meals. The value of free food or non-alcoholic beverages provided by the employer to an employee shall be the amount of expenditure which is incurred by the employer. But it is not taxable if the value of the meal is up to 50 rupees per day, guys. 50 rupees per day. It might be given directly or through vouchers or food coupons. If it is provided during office hour, that is in business premises, then up to 50 rupees it is exempt. Sir, what if it is more than 50 rupees? For example, assume the value of the meal is 75 rupees. Then 25 rupees would be taxable. 25 rupees would be taxable. Okay, sir. Then coming to tea snacks, not snakes, snacks. Okay. Will be provided during the office hours will be fully exempt, irrespective of the value. Then free meals provided during the working hours in remote area will be fully exempt, irrespective of the value, guys. Okay, sir. Then free or concessional tickets. Now assume you are working as an employee with an employer who is engaged in the business of transportation of goods or passenger. And for you or your family members, they are providing free transportation service. In that case, is it taxable as perquisite for you? Yes. At whatever price the same service is offered to the public, that amount will be taxable for you as perquisite, guys. This is relevant only for the employees who is working with the employer, where the employer is engaged in the business of transportation of goods or passenger. Is that clear? For example, assume I am working in VRL Logistics, who is engaged in transportation of goods. And now I want to shift some of my goods from Bangalore to Hyderabad. And my employer provided me free transportation service. If the same service was provided to an outsiders or for general public, they would have charged 10,000. In that case, 10,000 will be taxable for me as perquisite. What if I have paid 3,000 for my employer? Then only 7,000 would be taxable. Got it? Yes. Same way with respect to passenger transportation, guys. Okay. So I have given you can just see. Taxable value of perquisite would be value at which such benefit or amenity is offered by such employer to the public. So if it was offered to the public, how much you would have charged? Take the same value. And if anything is received from employee, reduce it. Got it? Yes. However, there would be no such perquisite to the employees of an airline or railways. So assume I am working as an employee of Indigo, where they have provided free transportation facility for me or any of my family members. Nothing will be taxable for me. Even for the employees of Indian Railways. Actually, Indian Railways provide such benefit. For whoever is an employee of Indian Railways, they provide free transportation along with their family members. So in such case, nothing is taxable as perquisite for them, guys. Then gift. This is important. Even connected to income from other sources. So if any gift is given by employer, first check whether it is in kind or in cash or money. If it is in cash or in money form, then it is always fully taxable, irrespective of the value. Whatever money is given by the employer to employee as the money or cash as gift, like best employee of a month or best employee of a quarter, it will be taxable under the salary, guys, fully. Okay. Then if it is in kind, check what is the fair market value of that gift. If it is less than 5,000, nothing is taxable. And if it is more than or equal to 5,000, full amount will be taxable. That is the full value of the gift. For example, assume my employer gifted me a watch whose value is only 4,000. Nothing is taxable. Whereas my employer gifted me a watch where the value is 8,000. It will be fully taxable. Fully 8,000 will be taxable under the head salary, guys. And please be careful, this 5,000 is the limit per annum. Okay, yes, because sometimes the employer might give gift a number of times in a year. In that case, check the value of the gift in aggregate for a year. Oh. Sir, what if gift is given by others, not by my employer, anyone else? Then we need to check section 56 to 10, guys, which is covered in section 56 to 10 under the head income from other sources. Got it? There, if the value of the gift is more than 50,000, then it will be taxable in the hands of recipient, but under the head other sources. But this section has some exceptions. For example, gift received from relative or on the occasion of marriage, irrespective of the value, it will not be taxable. But such exceptions is not applicable if the gifts is given by employer. For example, employer gave a gift to an employee on the occasion of marriage. Is it exempt? No, it is taxable. If the value is more than 5,000, then it is taxable. Hope you understood. And please be careful. Here the limit is 50,000. Clear? Whereas here it is 5,000. So please don't get confused. Okay. And this provision, I will cover it under the head other sources, guys. That is the last head of income. Next. Value of perquisite in respect of specified security or sweat equity shares. Value of perquisite would be the fair market value of the shares on the date of exercising the option minus the amount paid by employee to purchase the shares. Clear? Under the sweat equity plan, guys, or we also call it as like ESOP and all, the shares would be offered by the employer to employee at a discounted price. In such case, the discount part will be taxable in the hands of employee under the head salary. And here, sir, what is FMV? We need to check whether the shares are listed or not listed. If the shares are listed, then if shares are listed on a recognized stock exchange, then we need to take average of opening price and closing price on the date of exercising the option. Okay. Sir, what if the shares are listed in more than one stock exchange? For example, the shares of my employer company is listed both in NSE as well as BSE. In that case, check where the volume is more on the date of exercising the option. That is where the number of shares bought and sold is more, whether in NSE or BSE, on the date of exercising the option. On that day, on that particular exchange where the volume is more, take the average of opening price and closing price. That is opening plus closing divided by 2. Got it? Yes. Then the last one. If the shares are not at all listed, so employer company shares are not listed, sir. In that case, the FMV will be determined by the merchant banker, guys. Merchant banker. And this provision actually has connection to even capital gains head. I will just try to explain it with this example. Pay attention, pay attention. Assume Vikas is an employee of A Limited. Company gave him an option to purchase the shares on 1st September 2025. They gave the option, date of option, guys. Okay. On that day, FMV was 120. Should we consider this FMV? No. On what day did Vikas exercise this option? Date of exercising the option is assumed 10th September. On that day, FMV was 130. And Vikas is purchasing 100 shares of A Limited at a discounted price of how much? 100 rupees. But on that day, the day of exercising the option, what is the FMV? 130. So find out the difference between this. 30 rupees. So Vikas is getting 30 rupees discount per share, guys. Okay. So what is taxable perquisite in the hands of employee is 100 shares into 30 rupees discount. So 3,000 would be taxable as perquisite in the hands of Vikas, guys. Got it? Yes. Tomorrow, after holding it for certain months or certain year, if Vikas sell these shares, we need to compute capital gains income. And to compute capital gains income from the sale value of the shares, assume 200 rupees is the sale value per share, we need to reduce the cost of acquisition. What would be the cost of acquisition? Is it 100 rupees or 130 rupees, guys? This is a provision contained in capital gains head where they are telling the FMV value which was considered for calculation of perquisite will be allowed as cost. Will be allowed as cost. So 130 rupees will be allowed as cost of acquisition. Remaining income would be capital gain. Would be capital gain. That is either short term or long term, depending upon the period of holding, guys. Hope it is clear for you. Okay. Yes. Just observe. Just observe. Yeah. I will go back. Now the motor car. So if any asset is given by employer to employee to use it, what is the value of perquisite? We already saw, but except motor car. For motor car, we have a provision here. We have a provision here. Guys, this is a bit challenging, so please be attentive. Be attentive. Look here, look here. Hello. Pay attention. Yes. But let me try to explain the concept first. Okay, what all we have to take care. Then we will go through the provision. Okay. Yes. Now, when employer has given a motor car to employee to use it, or when employee is using the motor car, three things we have to check. Guys. What are those? Who owns the car? Is it owned by employee or employer? Or sometimes employer would have taken it on rent or on hire and give it to employee to use it. Okay, so two possibilities is there. Then second one, who is meeting the expenses? That is maintenance expenses, petrol, diesel, such expenses. Who is meeting it? Either employee or employer. Correct? Ah, yes. And the last one is for what purpose it is used. Is it used for personal purpose, office purpose, or partly personal, partly office? If it is for personal purpose, then it is taxable as perquisite in the hands of employee, guys. We need to see who is the owner and for what, who is incurring the expenses. Clear? Yes. So whatever benefit the employee is getting, it will be taxable as perquisite in the hands of employee. Sir, what if it is used for office purpose or only for official purpose? Then no matter who owns the car, who incurs the expenses, nothing is taxable as perquisite in the hands of employee, guys. Not taxable. It is not taxable. Okay, sir. Then partly means most of the scenario will fall here. Correct. So employee is using the car to go for office also and to take his wife for shopping or to drop his children to the school or any other place. In that case, it will be partly office, partly personal. How much is taxable is given in the law. We need to see it. And this is what is more challenging. This is where the students normally get confused, but please be attentive. I will try to explain it in a more simpler way, guys. Is that clear? Yes, sir. Chalo. Now we will get into the provision. Okay. Yes. First possibility. First scenario where car is owned by employee. Okay. Car is owned by employee means he is not getting any benefit with respect to car. Yes. Expenses also incurred by employee. That means he is not getting any benefit. So nothing is taxable for him. For whatever purpose the car might be used, nothing is taxable for him. Why so? Because he is not getting anything free of cost. Okay. Sir, what if the expenses are met by the employer or reimbursed by employer? Then check for what purpose the car is used. If car is used only for office purpose, then there is no perquisite. Why, sir? Because employee is not getting any personal benefit. Yes. Sir, what if car is only used for personal purpose? Then what is the benefit which employee is getting? Check it. Is he getting car benefit? No, no. The car is owned by employee only. But expenses are met by whom? Employer. Take what is actual expenditure which is incurred by employer minus if any amount is recovered from employee, the remaining is taxable, guys. And if question is silent about amount recovered from employee, please ignore it, guys. Oh, then sir, what if car is used partly for office and partly for personal purpose? Then we need to take what is actual expenditure incurred by employer. From that we need to deduct. We need to deduct either 1800 per month or 2400 per month depending upon the cc of the car. If the cubic capacity of the car or the engine is up to 1.6 liter, then we need to deduct 1800 rupees per month. Or if the cc of the car is more than 1.6, then we need to reduce 2400 per month. Per month. Okay. For example, actual expenditure per month, assume guys, incurred by employer is 10,000. And the cc of the car is assumed more than 1.6. So how much should be reduced? 2400. So how much we will get? 7600 into 12. Into 12. And please be careful, this is also per month, this is also per month. Clear? Yes, sir. And if driver is also provided for whom salary is paid by employer, then add 900. then add 900. No, sir, employee himself is driving the car. Then this part will not come. That's all. Then even here, if any amount is recovered from employee, reduce it, guys. Okay, fine. Next, car is owned or hired by employer. Okay, now let us see who is incurring the expenses and for what purpose the car is used. Expenses is incurred or reimbursed by employer. Okay. Check for what purpose car is used. Wholly for office purpose, that means the employee is not getting any benefit, so it is not taxable as perquisite. Sir, what if it is used only for personal purpose? That means the employee is getting two benefits. One is the car, the other one is expenses, guys. Take both. Actual expenditure incurred by employer plus 10% of cost of the car, or if it is hired by the employer, take actual hire charges paid by employer to hire the car minus if any amount is recovered. We need to take both with respect to car as well as expenses, both. Then, sir, what if car is used partly for office and partly for personal purpose? We need to take either 1800 or 2400, guys, depending upon the CC of the car. If the CC of the car is up to 1.6 liter, we need to take 1800 as taxable perquisite. If it is more than 1.6 liter, then 2400 per month as taxable perquisite. Is that clear? So whatever we reduced here, no, that become taxable here. That become taxable here. Please be careful. I repeat. Here we need to take actual expenditure and we used to reduce how much? 1800 or 2400. Remaining was taxable as perquisite. Correct? Yes. Whereas here, straight away, 1800 or 2400 per month will be taxable. Clear? Irrespective of the actual expenditure, this much will be taxable, guys. And if driver is provided, we need to add 900 per month. Only if driver is provided. Okay. Last case. So we are still under this where car is owned or hired by the employer, whereas expenses are incurred by whom? Employee. In that case, if car is only used for office purpose, it is not a perquisite, hence not taxable. Sir, what if it is only used for personal purpose? That means employee is getting only one benefit. What is it with respect to car? With respect to expenses, he himself is incurring it, so it is not a benefit to him. So only this part will come. Correct? Yes. So 10% of the actual cost of the car or hire charges if car is taken on hire, plus if driver salary is also paid by employer, we need to take it. If not, you can ignore it. Clear? Yes. Then will this come here also, sir? Yes. If by chance if salary is paid, then it will be added here. Okay. Anyway, that will be counted in actual expenditure only. But here expenditure is incurred by employee. If by chance salary of the driver is paid by employer, then we need to add it. If not, ignore. Okay, sir. Last one. Partly for office and partly for personal purpose. Then we need to take 600 or 900 per month, depending upon the CC of the car. If the CC of the car is up to 1.6 liter, then we need to take 600 per month. If it is more than 1.6 liter, then we need to take 900 per month. And if by chance, if driver is also provided for whatever value we already got, that is 600 or 900, for that we should also add 900 per month for driver element. Is that clear? So please be careful with this part, guys. This part. Clear? Yes, sir. We'll move forward. Value of perquisite in respect of credit card expenses. Now, credit card is used by employee, but such expenses is paid by employer. In that case, whatever is the membership fee or annual fee incurred by the employer on card provided to an employee will be taxable as perquisite. If anything recovered from employee, reduce it. But if such expenses is incurred only and exclusively for official purpose, then it is not taxable as perquisite in the hands of employee. Same way, if there is any club expenditure which is incurred by employer, but such facilities enjoyed by employee or his family members, then whatever is the cost incurred by employer will be taxable as perquisite in the hands of employee. And if anything is recovered, we will reduce it. Yes. Even in this case, if it is only or exclusively incurred for official purpose, then it will not be taxable as perquisite in the hands of employee. But in both of this case or this case, employer has to maintain the details with respect to what is the nature of the expenditure incurred, what is the date of the expenditure incurred, what is the amount of expenditure incurred, and he should also provide a certificate that the expenditure is incurred wholly and exclusively for official purpose. Only then it will be exempt in the case which I have highlighted in green color, guys. Then coming to the club membership, to obtain the membership of the club, if employer has paid any membership fees, that will not be taxable as perquisite in the hands of employees. Then what will be taxable, sir? Now assume employer has a membership in a club where employee and along with his family members have gone there, enjoyed a particular day, one full day party. The total expenditure is 1 lakh rupees, which is paid by employer. Will that be taxable as perquisite in the hands of employee? Yes. Whereas, assume to take the membership of the club, employer has paid 10 lakh rupees or 50 lakh rupees. Will that be taxable in the hands of employee, guys? No, that will not be taxable. Yes, we'll move forward. Value of perquisite in respect of health club, sports or similar facility. If this is provided for all the employees, then it is not taxable as perquisite, guys. But if it is provided to only selected employees, then it will be taxable. Then it will be taxable, people. Now we'll move to the next one, which is important. So again, be attentive, guys. Bit challenging, but be attentive. Employer contribution to recognized provident fund, national pension scheme or approved superannuation fund during the year, guys. So if employer is contributing more than 7,50,000 in a year for any of this fund, whatever is the employer contribution in excess of 7,50,000 will be taxable in the hands of employee as perquisite as per section 17 to 7. For example, for any of this fund or for all of this fund or any one or more, if employer assume during the year has contributed 8 lakh rupees, how much is in excess of 7.5, guys? 50,000. So 50,000 would be taxable as perquisite in the hands of employee under their salary. And section 17 to 7A will tell whatever income is earned on this 50,000, that is in the form of interest or dividend, even that would be taxed as perquisite. As perquisite. So the first part 17 to 7 is talking about principal element, whereas 17 to 7A is talking about income on that amount. Income on that amount. Yes, sir. So you can see here, let me read it. Annual accretion to the balance at the credit of the recognized provident fund, national pension scheme or fund, approved superannuation fund, which relates to the employer's contribution and included in the total income on account of the same have exceeded 7,50,000, where it is already included here. Okay. Would be taxable as perquisite under section 17 to 7A. That is, whatever is taxable under section 17 to 7, on that whatever income is earned, even that would be taxable as perquisite under section 17 to 7A. But how to calculate that is given by way of a formula, guys. This is important. Yes. So what is the formula? I will just divide that into two parts, guys. The first part and this is the second part. Okay. So the taxable perquisite under section 17 to 7A is equal to what is the contribution made in the current year in excess of 7,50,000. In my example, it was 50,000. Okay, divide it by 2 into R, that is the rate of return earned during the year. Plus, this is the contribution which was made in the past, but it was taxable as perquisite in the respective year. Even this will be a part of the fund even in the current year? Yes. Even on that, whatever return is earned, that is also taxable as perquisite. This is with respect to the past year's tax. Clear? This is with respect to the current year, whereas this is with respect to the past year. This is nothing but what was taxable in the past years under section 17 to 7. Whereas TP1 is nothing but what was taxable under section 17 to 7A in the past. TP is for the current year, whereas TP1 is for the past year, for which calculation would have already been done. So this amount also is still a part of the fund. Yes. Even on that, in the current year, we would have earned the return, right? Yes. Even that they are trying to include it as perquisite. Clear? I've just given the format here by way of table, what each one of this stands for and how to derive it. But I will try to explain this with an example, guys, or with a question. Yes. Come to the question back. I have one question on it. Actually, two questions, but now I will explain one question. Guys, due to time constraint, I will not be able to discuss each and every question in the question bank. So hope you guys understand. Yes. But anyway, I will try to cover the entire provision of 17 to 7 as well as 17 to 7A in this question. So question number 10, guys. Question number 10 in page number 58. Yes, sir. Employees and employer contribution to recognized provident fund during the previous year 25-26, that is the current year, is 10 lakh rupees each. So now let us focus on employer contribution. How much is employer contribution? 10 lakh rupees. So how much is in excess of 7 lakh 50, guys? 2 lakh 50. 2 lakh 50. So during the current year, employer has contributed 10 lakh. So in excess of 750, how much is there? 2 lakh 50. So it is taxable as perquisite under section 17 to 7. Very easy, sir. Okay. Next one is the important thing, 17 to 7A. The accumulated balance in the recognized provident fund. So in this question, only the information with respect to recognized provident fund is given. Guys, here totally three fund is there. We need to take, if all three is there, we need to take an aggregate of it. Okay, for example, assume for each of them, 3 lakh, let me take 3 lakh is contributed. Aggregate is how much? 9 lakh. In excess of 7.5 lakh, how much is there? 1.5 lakh. It will be taxable. If all three is there, consider all three. If any one or two is there, then consider only that. Is that clear? Yes. And in this question, only recognized provident fund is there. Okay, fine. So the accumulated balance in recognized provident fund as on 1st April 2025, that is opening day, and 31st March 2026, that is the last day, is 70 lakh and 96 lakh. Opening balance and closing balance of the fund is given. Oh, this is with respect to past years. So even in the past, we would have calculated the perquisite under section 17 to 7, no? That is with respect to principal amount contributed by employer in excess of 7 lakh 50. Yes. How much was that? In 24-25, 1 lakh, 23-24, 60,000, and 22-23, it is 20,000. So aggregate of this 180, that is nothing but PC1, guys. Clear? So whatever was taxable as perquisite in the past under section 17 to 7, that is with respect to employer contribution in excess of 7 lakh 50. We need to take aggregate of all that. Okay, now yes. Same way, we would have calculated the taxable perquisite under section 17 to 7A for the past, that is for the income part. Yes, how much is that? For 24-25, 8,000, 23-24, 5,000, 22-23, 1,500. Take the aggregate of it. So the aggregate of it is nothing but TP1, which comes to 14,500. 14,500, guys. So now we are calculating taxable perquisite under section 17 to 7A for the current year. Please be careful. This values is for the past year. Now we are calculating it for the current year. Okay, sir. So what is PC? That is the employer contribution in the current year in excess of 7 lakh 50. I am taking it as 2 lakh 50. Okay, now then these two figures I have already explained it. Now let us calculate what is the rate of return earned, guys. Rate of return earned. Okay. So I have given here also in this table what each one of them stands for. Okay. PC, that is the employer contribution in the current year in excess of 7 lakh 50, which is 2 lakh 50 taxable as perquisite under section 17 to 7. Okay. Then PC1 is the aggregate of perquisite which was taxable in the past under section 17 to 7, 180. Then aggregate of perquisite which was taxable in the past under section 17 to 7A. 17 to 7A. Okay, starting from 1st April 2020, because this provision was introduced only from 1st April 2020, guys. Okay, yes. So 14,500. Okay, sir. Now this is important, guys. What is the income earned during the year? What is the income earned during the year? Very easy, guys. Take the closing balance of the fund. From that, you deduct employee contribution during the year, employer contribution during the year, and opening balance. Remaining is the income earned during the year. Remaining is the income earned during the year. Correct? No. Yes, sir. Yeah. Closing balance minus opening balance minus the contribution made during the year by employer as well as employee. So at the end, we will get what is the income earned during the year. Got it? Yes. This is on an average on what balance? Opening balance plus closing balance all divided by 2 you take. Because this is not earned only on a particular day. This is earned throughout the year, guys. Whatever balance was there in the fund, on that throughout the year, we have earned 6 lakh. So we don't know what is the exact balance throughout the year in the fund because it keeps changing because this contribution and all is made every month, people. This 10 lakh what contribution is there, no, it is given per year, but this will be contributed by both employer as well as employee every month. So every month the balance in the fund would be changing. So I will not know the exact balance in the fund. So that is why they are asking you to calculate average balance. So what is the average balance? Opening plus closing all divided by 2. So on an average, the balance in the fund during the year was 83 lakh. Now, can we calculate the rate of return? Yes. So income which we have earned is 6 lakh on an average balance of 83 lakh. So we are getting a rate of 0.072, guys. If you want, you can convert it into percentage by multiplying with 100. I'm just keeping it as decimal. So what is it? Rate of return. Rate of return earned during the year. Now we need to take this for the calculation. Now pay attention. So let me just divide this part into two. First, let us focus on this one. 2 lakh 50 is the employer contribution during the year in excess of 7 lakh 50 and they're asking us to divide it by 2. Sir, why divided by 2? Important. Guys, this 10 lakh whatever employer has contributed during the year, no, it is not on opening day or it is not on the closing day. It is throughout the year. Every month employer would be contributing. In aggregate during the year, he has contributed 10 lakh. Agree? Yes, sir. So that is why they are taking the half of it. Clear? Because as this entire 10 lakh is contributed throughout the year. So a part of the amount will be contributed first month, second month, third month, fourth month like that throughout the year. So I cannot take full 2 lakh 50. Why so? Because if I take entire 10 lakh and in excess of 750, how much is there? 250. Then it is as if we contributed on the first day itself. Did we contribute the entire amount on the first day itself? No, no, throughout the year. So that is why on an average, they are taking half of it, divided by 2. Divided by 2. Even in your accounts and all, sometimes you would have done into 6 by 12 and all, right? Yes, similar to that. Clear? As this contribution is made throughout the year, we are just taking half of it. Okay, sir. Into the rate of return. So we will get 9,000 for the first part. So this is for the contribution made during the year. Whereas we are supposed to take this also. Sir, why is it? Might be your question. Guys, whatever amount was already taxed in the past as perquisite, is it still lying in the fund on the opening day? Yes. So if I ask you whether this amount is a part of the opening balance, you will tell yes, provided it is not withdrawn. Assuming it is not withdrawn, this amount is still part of opening balance. Even on this amount, will interest be earned during the year? Yes. So that is why they are trying to tax that also. Very complicated, but still they are trying to tax even that. These amounts were already taxed in the past. Now it is a part of the fund on the opening day on which we would have earned interest throughout the year. Yes. So that is why they are asking you to take both PC1, TP1 into R, which will come to 14,004. And now you might ask me, sir, why divided by 2 is not there? Guys, this was the amount which was contributed in the past. And on that, we have already earned income in the past. Now, this amount was part of the fund for the entire previous year 25-26 because this is an amount which was credited to the fund in the past itself. So, in the current year, have I earned the income on this entire amount throughout the year? Yes, guys. So, that is why we will not divide it by 2 years. Is that clear? Whereas for the current year contribution, we will divide it by 2 because I would have not earned interest for the entire year for this. Hope you got it. Yes, sir. So the total value of taxable perquisite is 23,004 rupees under section 17 to 7A. 17 to 7A. Now can we add up both and write total taxable perquisite? Yes. Yes, guys. And this is the average rate of return. Okay. This might not be the exact rate of return, but this is the average rate of return, guys. Hope you got it. Yes. And also there is one point. When employees contribution to a particular fund, that is recognized provident fund, is more than 2,50,000 in a year, Then on that excess contribution, whatever interest is earned will be taxable as perquisite in the hands of employee, guys. So actually employee contributed how much? He also contributed 10 lakh. How much is in excess of 2.5 lakh? 7.5 lakh. So on 7.5 lakh, whatever interest is earned is also taxable in the hands of employee. This point I have not yet covered, but you should know it is relevant for this question. And how to calculate income on that is not a part of your syllabus. If at all, if there is any question like this, you can just give a note like this. Just give a note. Is that clear? And please be careful. This note is with respect to employees' contribution. Whereas whatever calculation we did here was with respect to whose contribution? Employer contribution, guys. Got it? Yes, sir. We'll move forward. Interesting provision, but little challenging. Yes. So now I have given the list of tax-free perquisites. Means the following is not taxable in the hands of employee, guys. What are those? One by one, quickly we will go through. First one, refreshment. The value of refreshment provided by the employee during the office hours and in office premises will be fully exempt irrespective of the value. Then lunch or dinner provided during the office hour in the business premises will be exempt up to rupees 50. If it is more than 50 rupees, then the difference would be taxed. Whereas if it is respect to tea, coffee, snacks and all, it is fully exempt, guys, irrespective of the value. Oh. Then recreational facilities. The value of recreational facilities provided to an employee will be exempt, provided it is provided for all in general. If it is provided to a few selected employee, then it will be taxable for them. Okay. Then telephone facility provided by the employer to employee, including the landline connection, will be fully exempt. If it is a telephone allowance, it will be fully taxable. But if it is a telephone facility or if the telephone bill or the mobile bill of the employer, sorry, of the employee is paid by employer, it is tax free. Okay, sir. Then transport. If transport facility or cab facility is provided by employer to employee, guys, then it will be exempt. But if it is a transport allowance or conveyance allowance and all, we have learned under section 1014. It might be not fully exempt. To whatever extent it is exempt, we have learned it. Got it? Yes. Next, perquisite allowed outside India by the government. If the central government is providing any perquisite, including allowances, for a citizen who is providing services from outside India but to Indian government, then all the allowances and perquisite will be exempt, guys, as per section 10 clause 7. Org. Next, employer contributions to staff group health insurance scheme will be exempt. So if health insurance policy is taken on the health of employees for which premium is paid by employer, it is not taxable in the hands of employee. But if it is a life insurance policy on which premium is paid by employer, it will be taxable under the head salary in the hands of employee, guys. Clear? And for health insurance policy, deduction, the premium deduction is provided under section 80D, employee can claim it. And for life insurance policy, deduction is allowed under section 80C for premium paid. Clear? Whereas here what we are learning is, if premium is paid by employer on the health insurance policy of employee, it is exempt. But if it is on life insurance policy, whatever premium is paid by employer will be taxable as perquisite in the hands of employee, guys. Next, personal accident insurance. Payment of annual premium by employer on personal accident policy affected by him to his employees fully exempt, guys. Then amount spent on training of employees will always be fully exempt. It will not be taxable as education facility. Then free rations provided to the armed forces or the person who is working in Indian Army would be exempt, guys. Then computer or laptop provided to employer during office work or even if it is used partly for personal purpose, still it is fully exempt. Then rent-free houses or conveyances provided to High Court or Supreme Court judges, Office of Parliament, Union Minister or leader of opposition party or in Parliament will be fully exempt, guys. Then tax paid by employer on non-monetary perquisite of employee is tax-free. It is exempt in the hands of employee under section 1010 CC. Sir, what if it is monetary benefits? If tax on salary income of employee is paid by employer, it is taxable as perquisite in the hands of employee, guys. But if the tax is paid on non-monetary perquisite, then only that part will be exempt. Is that clear? Yes, sir. Then medical facilities. So if it is a medical allowance, it is fully taxable. But if it is a medical facility, so if it is a medical facility provided by employer to employee or any of his family members for medical treatment in the hospital owned by the employer or managed by the employer, or even if it is a government hospitals, then it is fully exempt, guys. Fully exempt. Sir, what if it is any other hospital? In that case, whatever is the cost incurred by the employer will be taxable as perquisite in the hands of employee, guys. Only if it is an hospital owned or managed by the employer, or if it is a government hospital, it is exempt. Any other hospital in India, it will be taxable. Sir, what if medical facility is provided outside India? Then there will be three expenditure, guys. One is cost of medical treatment, cost of stay, and cost of travel. Cost of medical treatment and cost of stay, that is in the foreign country, of patient along with one attendant will be exempt as per the limit permitted by RBI. And there is no fixed amount here, it will vary from case to case. Okay, sir. Whereas cost of travel of a patient along with one attendant will be exempt only if the gross total income of such employee is not more than, that is, does not exceed 8 lakh rupees. And gross total income, please be careful, not gross salary or taxable salary, it is gross total income. If the gross total income of an employee is less than or equal to 8 lakh, then nothing is taxable. If it is more than 8 lakh, then entire cost of travel which is incurred by employer will be taxable as perquisite in the hands of employee, guys. Got it? Yes, sir. Yes, and please be careful, this is an amendment. Gross total income of 8 lakh is an amendment, guys. Yes. Next 10.5. Leave travel concession. Now, if employee along with his family member has gone to travel or gone for a travel for any place in India during the employment or after employment, that is after retirement, if they have gone to travel for any place in India for which the expenses is incurred by employer, then it will be taxable as perquisite. But exemption is provided to certain extent depending upon the class of travel, guys. Clear? So what is it? We will see. And please be careful. The travel should be for any place in India. Sir, what if it is a foreign tour and all? It is fully taxable. Okay. So what is the amount of exemption? Actual amount spent by employer or the amount specified as per the respective class depending upon the mode of transport. Whichever is lower, guys. Remaining, if any, will be taxable. Clear? Sir, what is this amount specified as per the class? Literally, they have not mentioned the monetary limit. They just mentioned the class, guys. I will just show you. In the provision book, I have just given. Just a minute. Yes, here I have mentioned. You can just have a look into. Depending upon the mode of transfer, is it by air or by rail or by any mode other than air or rail? They just specified the class here. Okay. And what would be the amount as per the respective class? If there is any question in the exam, they will specify it. They will mention it. Okay, guys. Sure. Then how much exemption can we claim, sir? Can we claim exemption every year? No. They have made a block of 4 years. And in the block of 4 years, exemption can be claimed maximum twice, guys. So what is a block, sir? Calendar year 22 to 25 was one block. And now calendar year 26 to 29 is another block. And in a block of 4 years, we can claim exemption only twice. Sir, what if my employer is sending me for a trip every year? You can go and come, but exemption is available only for 2 times. And sir, in one block, if I have not claimed any exemption, can I carry forward? Yes, you can carry forward maximum one. So that means in the current block, you can claim 2 plus 1. Got it? Yes. Sir, what if I have claimed both the exemption here? That means in the next block, you can claim only 2 exemption. Sir, what in the previous block I had claimed 1 exemption? That means now you can claim 2 plus 1. Okay. Maximum 1 which you have not utilized, you can carry forward. As I told previously, sir, I have not claimed any exemption in the previous block. Can I carry forward both also? No, no. Maximum you can carry forward is 1. So in the current block, you can claim 2 plus 1. Got it? Yes. Fine, guys. Next. And here for this purpose, So employee can travel along with his family members. So who is family and all? Complicated thing they have told. Okay, here you can see. Family will include spouse and children of the individual, whether dependent or not, and parents, brother, sister of the individual, or any of them who are wholly or mainly dependent on them. So spouse and children is always covered, whereas parents, brothers, and sister is covered only if they are dependent. Okay, then exemption is restricted to only two surviving children born after October 1st, 1998. Okay, sir. Obvious surviving children means can we take the children who are not alive? Not possible. And sir, what if my child has born before this? Then exemption is not available. Okay. Then multiple birth after the first single child will be considered as one child only. They told exemption is available for maximum two children. Now assume employee got first child, single child. The second one is twins. Now for how many children can he claim exemption? Three. Sir, what if for first time only he got twins? Next, one more. Exemption is available only for two children. That is the first one. Clear? If the second one is twins, that is two or more, then exemption can be claimed for more than two children also. But if first itself is twins, next plus one, exemption is available only for two. Clear? Yes. Sure. Next, salary paid tax free. This point I already discussed. Guys, on the salary income of an employee, who is supposed to pay tax? Employee. But if in case employer is like a god, employer told, hey employee, why are you paying? I am there to take care. I will pay tax on your salary income. If employee salary income on which tax is paid by employer, then the tax paid by employer is also taxable as perquisite in the hands of employee. But but tax paid by employer on non-monetary perquisite is completely exempt in the hands of employee, guys. So just a minute. Just a minute. You can see I have given one example here. Income tax paid by employer on the salary income of employees, let us take it as 2 lakh. So on non-monetary benefit, 1.7 lakh. On monetary benefit, it is 1.7 lakh. Is it taxable as perquisite in the hands of employee, guys? Yes, under the 8 salary. And can 1.7 lakh be claimed as an expenses by the employer under the 8 PGBP? Yes, he can claim it as business expenditure because employee is working for his company, no? Yes. If employer pay tax on his income, he cannot claim deduction because section 40 will not allow it. But here, employer is paying income tax on the salary income of employee. How much? 1.7 lakh on the monetary benefit. That is allowed as an expenses. Okay. So out of 2 lakh, 1.7 lakh is on monetary benefit. Remaining 30,000 is on non-monetary benefit. This is exempt in the hands of employee as per section 1010 CC. And the same 30,000 will not be allowed as an expenditure in the hands of employer as per section 40A5, guys. Clear? This will be allowed as an expenditure for employer, whereas this will not be allowed. And please be careful, I will repeat once again. If employer or if the assessee pay income tax on their income, that is not allowed as an expenses under the 8 PGBP. But what we are talking about here is employer paid income tax on the salary income of employee. Can he claim it as an expenses? Yes, he can claim this, but not this. Got it? Yes, sir. Then if any other benefit or amenity is provided which we have not covered above, so there can be any other benefit which is provided by the employer to employee. In such case, we need to see what is the value of that benefit, service, right or privilege provided by the employer. That would be the value of perquisite in the hands of employee, which is calculated as per arm's length transaction. Arm's length transaction means when two unknown parties engage in a transaction without one influencing the other, at what price will they enter into a transaction? That is actually called as arm's length price. So that value will be taxable as perquisite in the hands of employee, guys. Got it? Yes, sir. Fine. So we are done with perquisite part, guys. Now we are entering into retirement benefits. Okay. So gratuity is a lump sum amount which is paid by employers to employee in order to support his post-retirement life. So if gratuity is received by employee at the time of retirement or termination of an employment, or if in case if employee has died, then if any of the family members are receiving it, then exemption is available under section 1010. But how much? If an employee is a government employee, 100% is exempt, guys. Or if employee is a non-government employee, we need to check whether they are covered under the Payment of Gratuity Act. If yes, the following is exempt. Least of the following three: actual gratuity received, or statutory limit of 20 lakh, or the last one, 15 by 26 into loss drawn salary per month, that is before retirement or before death, into number of years of service completed. If the months is more than 6 months, please round it off to next year. For example, assume before retirement or before death, the employee had rendered 28 years, 9 months service. So we need to round off to 29. 28 years, 9 months. So we are rounding it off to 29 years. Sir, what if it is 28 years, 5 months? We need to take 28 years. Okay, yes. Coming to others. Others means non-government employee who is not covered under the Gratuity Act. Okay, the first 2 points remain same, only the last point would change. Okay. Least of the following is exempt. First one, actual gratuity received. Second one, statutory limit of 20 lakh, which is same, guys. Last one, half into average salary of last 10 months per month. Okay, that is, you need to take the total salary of last 10 months. Okay, that is, assume he has retired in December, leave December, take the last 10 months salary. How do we calculate? Take the total salary of last 10 months divided by 10. That's all. Per month, what is the average salary we will get? Clear? And if there is no change in the salary for the last 10 months, you will get the same monthly salary only as average salary, guys. Okay, sir. Then into number of years of service completed, no round off. Ignore the months completely. For example, assume employee has rendered 30 years, 11 months of service. Ignore the months completely and take only 30 years. Sir, what if it is 30 years, 5 months, 4 months, 3 months? Still, we will take 30 years only. Here, completely ignore the months. Whereas here, if it is more than 6 months, take next year, round it off to next year. If it is less than or equal to 6 months, take the previous year. That's all. Got it, guys? Yes. And if any gratuity is received during the employment, then it is fully taxable in the hands of any employee, whether it is government or non-government, guys. Is that clear? Yes. Then I have some explanation with respect to this. Just a minute. Yeah. So while calculating average salary, this is common, similar to even leave encashment also. Now assume, guys, before retirement, last 10 months, employee was getting same salary 40,000. So how do you calculate average salary per month? 40,000 into 10 divided by 10. So you will get same. Clear? So if there is no change in the salary in the last 10 months, then monthly salary will be equal to average salary. Sir, what if there is any change in the salary? For example, before retirement, for 8 months he was getting 38,000 per month, and for 2 months he was getting 40,000. In between, he had got an hike of 2,000. So in that case, calculate the total salary for 10 months, divide it by 10 months. You will get what is the average salary per month for the last 10 months. It is like similar to how do you calculate average profit in your accounts, guys. Okay, they would have given profit for last 3 years or 4 years. You need to calculate on an average what is the profit per year for last 3 or 4 years. Same way. Clear? But most of the time they may not give the salary with respect to past and all. They may give salary per month. Take that only as average salary. Clear? Yes. Fine. Next. Now assume employee was working with Infosys company for 20 years. He retired and received the gratuity. And when he retired, he claimed an exemption under section 1010 for how much? 5 lakh. Okay. Now he started working with the TCS, worked there for 10 years and again retired. He again received gratuity. Can he claim exemption again? Yes. But in such case, the statutory limit will not be 20 lakh. When he is claiming the exemption for the second time, the statutory limit will get reduced from whatever exemption he has already claimed before. So from 20 lakh, we will reduce 5 lakh. So what would be the statutory limit while claiming the second exemption when he received the gratuity from TCS Limited? It would be 15 lakh. And while multiplying that number of years, we need to take 10 years and not 30 years. Because for this, already exemption is claimed, guys. Hope you got it. Same way. Now let us take same example, but when he retired from Infosys, he didn't receive any gratuity, or else he didn't claim any exemption. He didn't claim any exemption. Later, he started working with TCS, worked there for 10 years and retired and received a gratuity. So in such case, can he claim exemption now? Yes. What would be the statutory limit? 20 lakh itself. Why so? Because when he retired first from Infosys, he didn't claim any exemption for gratuity, guys. Is that clear? So he didn't claim any gratuity exemption. Okay. And when he retired from TCS, here we are supposed to take the number of years, right? Year or year. The number of years would be how much? It will be 30 years now. That is 20 plus 10. When employee retired or when he left the employment from previous employer, if he has not claimed any exemption at that point, then while claiming the exemption from next time, will we add that years? Yes, guys, we will add it for total number of years. Hope you got it. Clear? Yes, sir. Next, let us move forward for pension. Commuted pension. Guys, once employee retire, and please be careful, for government employee, it is always exempt, 100% exempt. But if it is received during the service, is it taxable for them also? Yes. This exemption is only if it is received at the time of retirement, termination, or death, guys. Please be careful. And if by chance, if employee has died, who will receive the amount? Nominee or family members. For them also it is exempt. Clear? But if it is taxable for them, where is it taxable? Not under the head salary. For a family member who is receiving this amount, it will be taxable under the head other sources. Clear? If employee is alive and if he is retiring and if he is receiving the amount, for him it will be taxable under the head salary, guys. Clear? Yes. Chalo. If it is a pension, monthly pension, it is always fully taxable, guys. It is always fully taxable, which we call it as uncommuted pension. Monthly pension will always be taxable for government as well as non-government employees, always. Whereas exemption under section 1010A is given for commuted pension. Sir, what is commuted pension? Guys, assume I was getting a monthly pension of 25,000 per month. Now there is some emergency. I need some lump sum amount. So I requested my past employer, please give me so much amount so that I can meet my need. So what employer did was he commuted whatever monthly pension I am supposed to get in future, which we call it as like actuarial valuation and all, and he paid me now lump sum. So that lump sum amount is called commuted pension. For that also exemption is available. What is it? If he is a government employee, whatever commuted pension he is received, it is fully exempt. Okay. If he is a non-government employee, then how much is the exemption depends on whether he has received gratuity or not received gratuity. Okay. First calculate if all of the amount is received, how much you would have got it. For example, commuted pension received, assume it is 70% divided by commutation percentage, which is 70%. So amount divided by percentage. So by doing this, we will get what is the pension you would have received if you had got 100%. Okay. And if in case, if non-government employee has also received gratuity, he is getting double benefit, no? So the amount of exemption is only 1/3 of it. So what if he is not receiving gratuity, he is getting only pension part? Then the amount of exemption will be slightly higher. That is 1/2. 1/2 of this figure, guys. Clear? All three cannot come, any one of this. Got it? Yes. And please be careful, guys. If employee is receiving pension, it is always taxable under the head salary. Sir, how come, sir? Employment is already ended, no, sir? No. Guys, anything which employee receives due to employer-employee relationship, either during the employment or even after the employment or during the leave period, it will still be taxable under the head salary, because the root cause for this is employer-employee relationship. Got it? Yes, sir. Fine. I'll just give an example for this also, guys, quickly. Pay attention. Assume I was an employee who was retired long back. Now, during the previous year, from 1st April to 31st December, I was getting a monthly pension of 10,000. Now, on 31st December, I thought I need some money lump sum. So, I requested my employer, sir, please give me a commuted pension lump sum amount. So, my employer commuted 75% of whatever I am supposed to receive in future. He gave me a lump sum amount of how much? 3 lakh. We call this 3 lakh as commuted pension. And what is the commuted percentage? 75%, which means whatever I was supposed to receive in the future, 75% he has computed now and he is paying me 3 lakh. Remaining 25%, will I continue to receive monthly? Yes. So from the next month, I will continue to receive only 25% of 10,000, which is 2,500 per month. So for Jan, Feb and March, I will get only 2,500. Even after March, I will continue to receive 2,500, but I am bothered only about my previous year. That is 25, 26. So whatever is the monthly pension, guys. So what is the monthly pension? 10,000 into 9 months, that is from April to December. Then 2,500 into 3 months, that is for this period, is fully taxable. 97,500, no matter who I am. Whereas for commuted pension, what is the commuted pension received? 3 lakh. Check what is the exemption. Assume I have received gratuity also and I am a non-government employee. Then calculate commuted pension divided by commuted percentage. So if I had received the whole amount, how much I would have received? 3 lakh divided by 75%. Clear? That 75% is nothing but this. Okay. As I have received gratuity also, into 1 by 3 it will be. So how much is the exemption? 1,33,333. Remaining is taxable. So the total taxable pension would be this figure. Sir, what if I had not received gratuity? Then here it would be 1 by 2. Sir, what if I am a government employee? This will be fully taxable. Whereas this is also fully exempt. This is fully taxable. This will be fully exempt. Full 3 lakh. And in that case, this will be nil. Got it? This will be fully exempt, guys. Full 3 lakh will be exempt. This calculation and all will not come. Okay. This part I am talking about. Next, leave salary. Now, every year the employee will be supposed to take or will be eligible to take a certain number of days of paid leave. Now, if he has not taken so many days of paid leave, then at the time of retirement or even during employment, he can encash that leave credit. He can encash that leave credit. So, if any leave encashment is received by the employee during the employment, it is always fully taxable, guys. Fully taxable, no matter which employee is, whether government or non-government. But if it is received at the time of retirement or termination, exemption is available under section 1010 AA. How much is that? If he is a government employee, 100% exempt. Then if he is a non-government employee, then least of the following is exempt. Oh, what is it, sir? Actual leave encashment received by an employee or a statutory limit of 25 lakh or last 10 months average salary per month into 10 months. Average salary of last 10 months into 10 months. Similar to gratuity. But one difference is, guys, for gratuity, when we are calculating the average salary of last 10 months, we need to exclude the month of retirement. For example, if I retire on, assume 15th December 25, completely ignore December. Take 10 months starting from November. Okay, that is last 10 months. Whereas if it is for leave encashment, we need to count 10 months from year only, preceding the date of retirement. From 15th December, I need to go back to last 10 months. Sir, will they ask the days calculation or months calculation and all? No, you need not worry about it, but good to know. This is how it is given in the law. Okay, sir. So take average salary of last 10 months. The calculation and all is similar to that, which I already explained, guys, here. Okay, average salary calculation. Yes, this one. But only difference is you need to take the average salary of last 10 months preceding the date of retirement. Preceding the date of retirement for leave encashment. Whereas for gratuity, it is last 10 months average salary preceding the month of retirement. Preceding the month of retirement. Okay, sir. Sure. Then leave credit into 10 months average salary per month. Now, what is leave credit? Leave credit has to be calculated as per Income Tax Act, guys. Now, as per Income Tax Act, employee is eligible to take 30 days leave for each completed year of service, or you can take it as 1 month. Clear? Employer might be giving more than that, but as per Income Tax Act, we need to take 30 days for each completed year of employment service. So, leave eligible as per IT Act, which is 30 days for each year, minus leave taken, we will get leave credit, which you calculate in months. Okay, into average salary of last 10 months. Least of the following would be exempt. Here also, guys, if any exemption was claimed by the employee in the past under section 1010 AA, when he is claiming the exemption for the second time, we will reduce the exemption claimed in the first time from 25 lakh statutory limit, similar to gratuity, which I explained here. Similar to gratuity, which I explained here. Got it? Yes. Next, Provident Fund part. So there are different types of Provident Fund, guys. Statutory Provident Fund, Recognized Provident Fund, Unrecognized Provident Fund. This actually is a fund or account which is opened by the employer in the name of employee, and every month both employer as well as employee would be contributing. And on this contribution, even interest would be earned. Sir, what is the tax effect of this? Firstly, statutory provident fund. For employees contribution, deduction is available under section 80C, whereas employer contribution is fully exempt in the hands of employee, and even interest is fully exempt, guys. Then coming to recognized provident fund. Then recognized provident fund means which is recognized by the commissioner of income tax. Okay. For employees contribution, deduction is available under section 80C, and this 80C deduction is available only if employee is following optional scheme, guys. Okay. And for employer contribution, it is exempt up to 12% of salary. If it is more than 12%, for example, assume employer contribution is 14%, then 2% would be taxable as perquisite in the hands of employee, guys. Okay. Then coming to interest part, it is exempt up to 9.5%. If it is more than 9.5%, assume the interest rate is 10%, then 0.5% would be taxable in the hands of employee. Coming to unrecognized provident fund, there is no tax benefit available. So no deduction under section 80C for employees contribution. Employer contribution and interest will not be taxable yearly, but it will be taxable when it is withdrawn. When the amount is withdrawn from unrecognized provident fund, the employee contribution, as whatever he has invested is getting back, it is not an income, hence not taxable. Whereas employer contribution will be taxable under the head salary, and interest on employer contribution also will be taxable under the head salary. Whereas interest on employee contribution will be taxable under the head other sources, guys. It will be taxable under the head other sources. That is interest income on employee contribution. Okay. So that means there is no benefit available for unrecognized provident fund because it is not safe to invest. So the government is not providing any tax benefit. They are trying to discourage it. Okay. The last one is public provident fund, which any person can go and open it, even without employment. If I am a self-employed person, can I go and open it? Yes, I can open it in my name, my spouse name, my children's name, anyone. So in this case, whatever is the assessee contribution, let us not call employee contribution here, assessee contribution, deduction is available under section 80C. Okay, but the maximum amount which you can contribute in a year is 1,50,000, guys. Anyway, the maximum deduction available under section 80C is also 1,50,000, all the items put together. Okay, whereas there is no employer contribution, then whatever interest is earned on the public provident fund account balance, it is fully exempt. Got it? Yes, sir. Then, if the amount is withdrawn from recognized provident fund before the continuous service of 5 years, then it will be taxable. Sir, what if it is withdrawn after 5 years of service? Then it will be fully exempt, guys. But if it is withdrawn within 5 years for the health purpose or medical purpose, or my employer is discontinuing the business, then in such case it will be exempt, even if it is within 5 years. Then this point, guys, please be careful. This is with respect to employee or assessee contribution. We already saw perquisite valuation under section 17 to 7 and 17 to 7A, but that was with respect to employer contribution. Whereas what I am doing here, that is second note, it is with respect to employee contribution. So exemption under section 10, 11 and 12 for interest is not available if employee contribution during a year is more than 2,50,000 on or after 1st April 2021. That is, let us talk about our previous year. So during our previous year, is this provision applicable? Yes. If employee contribution to provident fund is more than 2,50,000, then that excess part, whatever is there, on that what interest is earned will be taxable. For example, assume I contributed to my recognized provident fund 3 lakh during the previous year. So how much is in excess of 2.5 lakh? 0.5 lakh. On this, whatever income is earned, even though it is within 9.5%, still it is taxable. Still it is taxable, guys. But If there is no employer contribution, but only employee is contributing, in that case, instead of 2 lakh 50, they are giving the double of it, which is 5 lakh. If there is no employer contribution, only employee is contributing, in that case, instead of 2 lakh 50, the limit is 5 lakh. Assume only I am contributing to my Provident fund, which is assume 7 lakh. How much is in excess of 5 lakh? 2 lakh. On this, 2 lakh is not taxable. On 2 lakh, whatever income is earned, no, that will be taxable. Sir, why not 2 lakh is taxable? Guys, I myself is contributing it to my benefit or for my benefit. So 2 lakh is like a principal amount that is not taxable. On 2 lakh, whatever income is earned, only that will be taxable. Clear? Yes. So please be careful. I am repeating it again and again. This second note is with respect to employee contribution. Whereas for employer contribution in aggregate, the contribution to the recognized provident fund, NPS and approved superannuation fund in aggregate, if it is more than 7,50,000 in a year, whatever excess is there, that is taxable. Plus whatever income is earned on that, even that is taxable, which we already covered along with the question. That is the perquisite with respect to section 17 to 7 and 17 to 7A, guys. Got it? And one more thing. Sir, if employer is contributing to the NPS of employee, what should we do? Employer contribution to NPS first should be included in the salary income of an employee. Then employee can go and claim deduction under section 80CCD, guys. Exemption is not available under the salary head, but deduction can be claimed for both employee contribution as well as employer contribution to NPS of an employee as per section 80CCD. Got it? Yes, sir. Then deductions under section 16. We have three deductions covered under section 16. First, standard deduction under section 16 1A. How much deduction is available depends on which scheme the employee is following. If employee is opting out of default scheme and following optional scheme or regular provisions of the act, then he can claim a flat deduction of 50,000. Sir, what if gross salary itself is less than 50,000? For example, gross salary of an employee is only 40,000. Then he can claim only 40,000 deduction. That is actual gross salary or 50,000, whichever is lower. Okay, so 50,000 is like a standard deduction. Okay. Sir, what if employee is following default regime under section 115 BAC? Then there is a flat deduction or standard deduction of 75,000, guys. Clear? And here also, sir, what if gross salary itself is less than 75,000? Then only that much. For example, assume gross salary of an employee is following default regime is only 60,000. That means he can claim only 60,000 as standard deduction, guys. Got it? Yes, sir. Then entertainment allowance under section 16(2). Guys, entertainment allowance should first be included under the gross salary for any employee. Later, deduction can be claimed only by government employee. So this deduction is available only for government employees, not for any employee. Got it? Yes, sir. So how much is the deduction? Least of the following. Actual entertainment allowance received or 20% of basic pay or 5,000 per annum, not per month, per annum. Clear? So whenever employer is providing entertainment allowance to employee, for any employee, first include it in the gross salary. Then give deduction only for government employee. Sir, what if he is a non-government employee? No deduction. Straight away entertainment allowance will get taxed. Got it? Yes. Next, professional tax is paid by an employee. It is an obligation of an employee, guys, to be paid to state government in order to provide them the employment opportunity in that state. Okay, sir. Now, if profession tax is paid by employee, straight away claim deduction. Sir, what if profession tax of employee is paid by employer? It is like obligation of employee met by employer. First, it is taxable as perquisite in the hands of employee. So include it under the salary head. So include it in gross salary calculation. Then give deduction. Then give deduction. I will just repeat. Please pay attention. I will just go to the format. Just a minute. Okay. Now, assume profession tax is paid by employee. Then straight away deduction. Nothing to be included here. Okay, now, yes. Sir, what if profession tax is paid by employer? First include it under the perquisite while calculating gross salary, then give deduction. then give deduction. So entertainment allowance also, as I explained, first include it fully while calculating gross salary, then give deduction under section 16(2) only if he is a government employee. Only if he is a government employee, guys. Yes, so yes, come back to the provisions. So done with the deduction part. Then important note. This is important, guys. Important note with respect to salary. So in few provisions, while claiming exemption and all, we saw 10% of salary, 5% of salary and all, or while valuing the perquisites. Now, what is salary? For salary head purpose, I've given one single note. What is it? For the purpose of this chapter, salary means basic pay plus DA if it is provided in terms of employment, okay, or forming part of retirement benefit. Okay, that is, if DA is included while calculating the retirement benefit, we call it as forming part of retirement benefit. Okay, yes. Plus commission if it is expressed as a fixed percentage of turnover. Normally, this is paid for like salesman or who is engaged in marketing or sales guys. Clear? For example, they will tell you whatever sales you achieve, we will pay 1% of that as commission. So in that case, we call it as commission as expressed percentage of sales. Yeah. So what if commission is paid as fixed amount, like every month 5,000, 10,000? Then we don't count it here. It is fully taxable, but while calculating this, we don't consider it as. Okay. So normally for salary head, wherever they have mentioned the word 5% or 10% of salary, we need to take basic pay plus DA plus commission. For DA and commission, condition attached. But it will change in three scenarios. One is it? Gratuity covered under the Gratuity Act for non-government employee. There, salary means what, guys? Basic pay plus DA. Basic pay plus DA. For example, I will just show you. Where is this? Gratuity part, no? Yeah. Yes, for this one. This one, guys. Okay, for DA, no condition. For DA, no condition. Okay, sir. Coming back. Next, entertainment allowance, which just now we saw. For government employees, salary there means only basic pay. Only basic pay. Then, for perquisite valuation, that is with respect to rent-free accommodation for non-government employee, there we need to take 5% or 7.5% or 10% of salary. What is salary for that purpose? Basic pay plus DA if provided in terms of employment or forming part of retirement benefit plus bonus commission. For commission, no condition. Okay, plus any fee and all taxable allowances, because this is with respect to perquisite valuation. Before that, we would have calculated all the taxable allowances. Consider that also. Got it, guys? Yes. So this is an important note with respect to salary head. Fine, guys. So we are done with all the provisions with respect to salary head. Now, I have given the list of expenses or exemptions or deductions which are not allowed for an employee who is following default scheme under section 115 BAC. Before going through this list, guys, if employee want to follow optional scheme, then he has to intimate to the employer. Accordingly, the employer will calculate the total income and tax liability of an employee and deduct TDS under section 192. If employee doesn't inform anything to the employer, then employer will assume that employee wish to follow default regime and accordingly make the calculation and deduct the TDS as per section 192. Now assume employee has informed to the employer that he wants to follow optional scheme and accordingly the employer has done the calculation and deducted TDS. Now at the time of filing the return, can employee change it to default scheme? Yes, he can do it. And accordingly the figure might change. There might be excess tax or lower tax. Accordingly it will get adjusted. If the employee is supposed to pay more tax, he will pay it, or if he is eligible for any refund, he will claim it. Clear? So at the time of filing the return, we learned it in tax rate chapter also. Can I choose whichever scheme I want? Yes, provided I don't have income under the 8 PGBP. If I have income under the 8 PGBP, then I will have freedom, but restricted freedom. How so? First, I will be following default regime. I can opt out of default. I can go to optional. I can again come back to default, but I can never go back to optional again. This is for the assessee who has income under the head PGBP, guys. Okay, let us come back to this. Now, here I have given the list of exemptions or deductions which an assessee or employee cannot claim if they are following the default regime under section 115 BAC. Actually, I have given the full list here, guys. Full list. But let us focus on which I have highlighted in red color. That is not allowed. Not allowed. Try to remember what is not allowed under the default regime, guys. Chalo, pay attention. Almost done. Almost done. Pay attention. So HRA exemption under section 1013A, even though employee is still paying rent, not allowed. Exemption is not allowed under default regime. Then any allowance paid to High Court or Supreme Court judges and paid by UNO to its employees, not allowed. But if it is provided by central government to the Indian citizen rendering services outside India to Indian government, that is allowed. That is allowed. Okay, sir. Then 1014.1, what is not allowed? Let us focus. So you try to remember what is not allowed. Rest all is allowed. Got it? Yes. Sure. Fine. We'll focus on this. Daily allowance, helper allowance, or any allowance granted for encouraging the academic research and training pursuit in educational or research institution is not allowed under default regime. Then under 1014.2, children education allowance, 100 rupees, huge exemption they were giving. No, they have blocked it under default regime. Hostel expenditure allowance or other allowances, any special compensatory allowance, they are not allowed. Whereas transport allowance is allowed. Okay. For handicapped, deaf, blind, and all. Okay. So now coming to the perquisites. I have given everything category wise, guys. So yeah, free food or beverages through vouchers or food coupons which is provided and exempt up to 50 rupees per meal. No, that is not allowed. Okay. Then leave travel concession not allowed. Then rent-free official residence and leave travel concession provided to High Court or Supreme Court judge not allowed. Okay. Then other exemptions from perquisites like laptop, computer, and all is allowed. Okay. Retirement benefit, everything is allowed. Very good, sir. Deductions under section 16, only standard deduction is allowed, but standard deduction under optional scheme is 50,000, whereas under default regime it is 75,000. Whereas the other two is not allowed under default regime. Is not allowed. Yes. So please be careful with this list. Go through this list once, twice, so that you remember this, guys. It will be tested in the exam. It will be tested in the exams, guys. So this is all about the revision of the first head of income. We have taken good amount of time to revise each and every provision, guys. And please make sure that you guys solve some good number of questions. So in my question bank also, I have given good number of questions on each element like retirement benefit, HRA and all, and also on the combined salary question where number of adjustments would be there. So please go through each of them, try to practice at least 3 to 4 questions you can pick. I have given good number of questions including the additional questions, guys. So I would not be able to cover it in this revision session because it will consume a lot of time and the length of the video will become too much. It's already been more than 2 hours. I know you also don't want me to cover each and every question, but I want you guys to practice it. Got it? Thank you, guys.